The break after loss trade analysis is very closely connected to the general analysis on break since last trade, in which we elaborated on the roots and effect of pausing for a while after you finish a trade. If you haven't watched this video yet, you may want to watch it first, because it gives you the foundation to understand the basic principle of this analysis. The break after loss trade analysis aims to detect a loss-making pattern in case you have just had a lost trade. Traders show a tendency to try to recover previous losses very quickly. However, their level of preparation for a trade may suffer in case they do so. Lost trades are a normal part of trading as much as profitable trades are. Of course, I understand nobody likes losing, especially if it means that we lose our money which we work super hard for. Even though lost trades are a normal part of trading, they may have effects on our psychological state that would trigger behavior which are not ideal, such as neglecting enough preparation before we enter a trade. It may be that we feel like we have to recover our losses quickly, or it may be that we feel the likelihood of winning is not much higher because we just lost the last trade, which is not true. We may feel annoyed, angry, or aggressive, all limiting our ability to make rational judgments. This is the real risk of lost trades, not that we lost some money in the trades, rather that our emotional state changes, which will lead to unfavorable decision making. One of the measurable factors we can look at is the pause we did after a lost trade. Other factors are, for example, an excessive risk-taking compared to our normal trades, which we will cover in another analysis. We will have a look at some traders' performance as we did in the break since last trade analysis. To quickly recap, the trader did show a correlation between the break in between trades and the average performance of the trades. The shorter the break, the less profitable the trader was, with very short breaks even leading to an absolute loss on average. As we can see in this chart, the same correlation can be detected in the break after loss trade chart. Therefore, we can derive that at least part of the problem is that the trader only pauses very short after lost trades. The average payoff per trade with less than 5 minutes break is minus 7 pips average loss per trade, which is even worse compared to the performance after normal trades with only a minor break. The average payoff in the break since last trade analysis was minus 5 pips only. Moving with your cursor over the bar, we see that with 0 to 5 minutes break, the trader executed 143 trades, while with a 5 to 10 minutes break, the trader executed 175 trades. Those two buckets make up more than 50% of the total trade after a previous loss of this trader, showing that he has a clear pattern of pausing only briefly or not at all after a lost trade. The total amount of trades after a lost trade you can derive by adding up all the trades of the different bars as shown here. Combined with the negative payoff in those trades, this behavior causes a lot of money. The good news is that if the trader does a break of minimum 20 minutes after a lost trade, the average performance becomes positive. In case you have a similar pattern to this trader and you start to work on this behavior, you can make use of the more recent time frames in order to check your progress. You will be able to detect whether your effort already started to pay off by looking at the total payoff from the trades with only minor breaks in the last 1 or 3 months. Similar to the strategy which trader can apply to increase their break after a trade, integrating certain routine after a lost trade may also help you to erase or soften this loss-making behavior. Based on the feedback from other traders, it's usually become even harder to take a break after a lost trade compared to other trades. However, positive effect is oftentimes much higher. Creating a positive mindset and in some way rewarding ourselves with a little break after we do some work may help people to overcome those loss-making patterns. I understand this may sound counterintuitive after actually losing some money. However, we may have to keep in mind that loss trades are part of the game and we have to accept them. In trading, you are competing against other traders, and this is certainly one of the more tough parts of trading. But if we want to be better than others and beat them in this game, we will have to continuously work on ourselves. In trading, you usually don't lose money quickly because you have picked the wrong direction in a trade. However, it is because of irrational behavior that makes people keep losing money. In case you do have a significant loss-making pattern due to short breaks after lost trade, you may choose to receive a notification from us warning that you have just entered another position with a short break, which on averagely end up with an underperformance in your trade. Trading can be very demanding, and a little technical support may actually help you to free your mind and focus better.